Hey guys, welcome to BK Forex Daily Technicals for 5/8/13, Rebound and Risk FX. Trading foreign exchange and margin carries a high or low risk might be simple for investors, so I ask you to read the disclaimer very carefully to understand all the risks associated with trading Forex on margin. Well, Rebound is a very small rebound today, but one that's happening nevertheless. Euro, obviously, of course, yesterday broke the 31 handle in North American session and then just kind of consolidate around 3070. We'll still continue to consolidate well ahead of this 3050 level, which is acting as a key support over the last several days, right over here. But still contained within this 3125, 3050 zone. And that's kind of how we've been trading for the last several days. That seems to be the two key parameters that everybody's watching. We had a small rebound, basically in Asia as equities kind of improved. The euro came up through the 31 handle, ran all the way to 15, and has come back down. Very little data on the calendar today, so we might have to wait till North America to see how well everything trades. If we have some continuation of risk, then 31.25 should extend. And then if we look at the longer term charts, it brings in of course, the 32 level as the next level. So there's two small ranges now. The smaller range is 30.50, 31.25. The larger range is 29.50, 32.50, and we're bouncing within two. Right now, we seem to be breaking up. So we're trying to break out towards the higher end of that range. But if you notice, the volatility has really compressed over the last several days. It's just there's nothing, absolutely nothing going on. Similarly, even Aussie is bouncing back today after yesterday's shellacking. Aussie is now sort of back up above 102 after testing several times the 101.50 level, just ahead of the 101.50 level. If you go back on the dailies, you can see that the 101.50 level was very strong support here. This is going back all the way over like to 2012, and that is one of the reasons why it's kind of holding. However, one of the things that I noted yesterday is that if we go into the 4-hour chart, you'll see this much better. The 102.25 has been very strong support that finally broke yesterday after the RBA meeting. And if we do rally, that's going to be the next serious level of resistance. So former support now becomes resistance here at 102.25. Meantime, 101.50 continues to hold in the Aussie as it's very long support that hasn't been broken just yet. Cable sort of hanging out. Cable had a weak day yesterday. There was a lot of talk. There was a sell-off in euro pound and a clear kind of pushed everything well below the 55 handle. But still, as I noted, the very important 54.50 level, 54.50 was tested and held. And again, very little volatility. This is a 4-hour chart. You see over the last 48 hours, we've had virtually no movement in either one of the pairs. And lastly, dollar yen seems to be weakening a little bit, and we're not getting that push through 99. 99.50 corridor. The only positive thing I think for dollar yen bulls when you're looking at this chart is the fact that we're still holding 98.50 support. If we break this below, this would again set yet another failed high in dollar yen right before 99.50. If we manage to push ourselves back up into the 99 level and start to run all the way through here, a takeout of 99.50 does put us right back into a position of 100. But for now, dollar yen seems to be drifting down. And a break of 98.50 would definitely seal the fact that this was yet another failed low on the trade. Lastly, the only piece of news was confirmation by RBNZ Governor Wheeler that there was intervention in the Kiwi, and the Kiwi got shellacked. Right over here, you can see it just got shellacked for almost a penny on the idea that the RBNZ has come in to intervene. This is sort of interesting, I think, in a sense that because Kiwi is such a small currency and they were able to move it down, maybe it would presage what could happen in Aussie dollar if the Australian authorities decide that they just simply are unable to push the Aussie lower and will come in and try to do some intervention. But either way, that was about the only interesting thing that happened in the Asian session today in terms of volatility. And we have found, even though it broke the 84.50 support, we have found again support here at the 83.50 level. So for Kiwi to experience further weakness and further sell-off, we need to see this level, 8250 level, be given as the day progresses. It doesn't look like we have much development as the day goes, but still, I think the edges of the key levels are kind of important, especially in the euro. The fact that it's holding 3050 for so long is mildly bullish, and the takeout of 3125, if we go back to this chart just for 1 second, um, does put us back on track, or does put us in a position to run right back into 3150, 3200 zone as the day progresses. But if we get risk aversion as the day progresses and we finally break the 3050 level, then we're right back towards the lower end of the channel here, and that could actually drag everything. Pound below 54.50, Aussie below 101.50, and dollar yen down to 98.50. So resolution is looks like maybe coming soon, just not yet in the European session. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out. As always, trading foreign exchange and margin carries a high or low risk, so I ask you to read the disclaimer very carefully to understand all the risks associated with trading foreign exchange.